Good morning, everyone, and welcome to BGA's Tuesday Morning Coffee Talk. These are our weekly sessions where we will be providing industry insights to our agents. We share product updates, market trends, policy changes, and marketing that will help agents find the sales to grow their business. We post these on Tuesday before noon and for our listeners on Apple and Spotify podcasts. My name is Trent Zimmermann. I'm your host. And this week we're joined by Matt Riebel, Chief Distribution Officer at Protective. Matt, thanks for joining us.
Yeah, my pleasure. Appreciate the opportunity.
So Matt, before we get going into Protective, let's talk about you for a little bit. Lifetime Ohio guy?
Yeah, lifetime Ohio guy, primarily Columbus, Ohio. So I either going to make some friends or enemies here, but that's where Ohio State University is. So we're big Buckeye fans in Columbus. Yeah.
But you didn't go to the Ohio State. You went to University of Dayton, is that correct?
That's right. Yeah, I didn't go to Ohio State. I went to University of Dayton, which is over on the western side of the state. Really, really good university.
So from what I hear, just people in the industry, they talk about you as a great leader, great coach, putting other people first and honesty. Now, I know Protective wasn't your first job. So what happened between University of Dayton and Protective that helped build these skills and lead you to insurance?
Yeah, so it's kind of an interesting question. So I'll kind of go back, and I think I was like a lot of people. I didn't end up with a degree in the first thing that I thought that I started to study. So I originally, my freshman year in college, I was a marine biology major. I was going to be the next Jacques Cousteau. And I went from there. There's a whole other story there about why I didn't end up going down that path. But I went from a marine biology major to a marketing major. And then I vividly remember this night talking with one of my roommates in the house that we had. And I was just talking with him about just the impact that my teachers from an academic standpoint, my coaches from an athletic standpoint, just the incredibly positive impact that they had on my life. And he just heard me talking about this and I was all jazzed up. And he's like, you know what? That's what you should do. You should be a teacher. And I was like, you know what? That's what I'm going to do. So I actually started, I got my degree in secondary education and I started out of college. I was a high school English teacher and I coached football, basketball, and track again for 4.5 years. And that was just an incredible experience. And that was just like missionary work every day. And that was kind of at a time in my life, and this persisted for a little while, where the whole idea of work-life balance, I had none of that. I just couldn't. I mean, it was just, I was on all the time. So consequently, I just kind of burned out in about 4.5 years. And I said, all right, I'm going to do something different. And so I thought, you know what, because if you know anything about education, the way you get paid is your educational level is this, you've been here this long, you fall into a little box and that's what you get paid. I was like, you know what, if I'm going to do something different, if I'm going to work this hard and I'm going to be this committed to being the best I can be, I'd like to do something that actually rewards me for that kind of an approach to work. So that's how I got into the financial services business. I was originally a stockbroker. So I smiled and dialed. I called 100 people a day, cold called 100 people a day. And then just one thing led to another. I had my first sales leadership role, and then I had a regional leadership role. I had several different national leadership roles. And then, a bunch of different head of distribution, so all different channels. And then I had a couple of opportunities to be a P&L business leader, to be the president of a couple of companies. And I really feel blessed in that I've been in the life insurance business, the annuity business, the retirement plan business, the pension risk transfer business, the mutual fund business. There are a couple other ones I won't kind of bore you the whole thing, but I feel blessed and I'm grateful every day for that wide array of different experiences and people I've had an opportunity to work with. But back to your question about University of Dayton till now. So clearly you look at that and you're like, wow, how did that work? How did you go from being a teacher and a coach to, the things that you've done in your career? and people always ask me like, well, don't you miss being a teacher and a coach? And the reality is, I'm like, I never really stopped doing that, because if you think about, things that teachers and coaches do, they teach and they motivate and they coach. And I mean, I've been doing that. I've been in the financial services industry now for 35 years, I mean, all those things that I did when I was a teacher and a coach, I do those things. I do those things every day. So it's just kind of an interesting way to start. But the reality is, I think that all those things that I learned and was passionate about early out of college were things that have actually helped me in this financial services business as well. So kind of an interesting question. Thanks.
It seems like to me that the good things we hear about Protective is leadership in the industry, once again, putting others first in honesty. And those are things that we just talked about with you and how you are still a teacher. Is there some sort of cohesion there that drew you to them specifically?
To Protected Life?
Yeah.
Yeah, there is. There definitely is. I got recruited by a headhunter to come to Protective Life in 2014. So I've been here almost exactly 10 years now. And this guy had been, I was 17 years at Nationwide, about 5 years at MetLife before I came to Protective. And this headhunter, he'd been trying to get me to go to here and there, and he's always like, "Oh, this is a great opportunity, and all this growth and all that." It's like, great. And I was just never, really interested. I think what he caught on to along the way, though, is I just know that, like, every company out there, there's all kinds of great business opportunity. There's great growth. That everybody's the same. So that's going to be true no matter what. The thing that he picked up from me over time was the most important thing to me are the culture and the people within the company. So that's how he pitched me on. He said, "Look," he goes, "I know all this other stuff. You can do that anywhere, but the people and the culture of this company are like something I've never seen. You need to talk with them." So anyway, long story made short, I talked with them, and he was right. I mean, the culture of the people at Protective Life, it was then and is now, and it's actually even better than I thought it was going to be when I first joined the company. But it's just unparalleled from my perspective in the industry. So there's no doubt about it. That's what drew me to Protective Life at the very beginning, and that's why the last 10 years of Protective has just been just this incredible opportunity.
What stands out about the culture then?
A number of different things. Number one, just the honesty and integrity of the people, and it's kind of an interesting thing, because it's not just the people. They are that way as individuals, but that translates into the way that we do business. I mean, we're always going to be transparent. We're always going to be straightforward. We're always going to do the right thing, and we're always going to do the right thing for the right reasons. I mean, those are the things that come out in what we do in business every day. We're also very focused on our people. I mean, we recognize that there is no such thing as the company. The company is the people, and investing in our people and caring for our people is vitally important. And that's why, consequently, we have people at Protective who've worked there for 30 plus years, and we have a lot of them. And that's because of a lot of those different things. I think the other element of it is just that, no matter what we do, well, let me say just one more thing about that, is that I think it's that the way we work with our employees, but it's also the business decisions that we make along the way always have that same thing. Are we doing the right thing? Are we doing it for the right reasons? Are we doing it the right way? And those things come out in the decisions we've made. I've seen us make lots of different decisions that I knew that we would make less money by making that decision, but we knew that it was the right thing. And that just doesn't happen in a bunch of different places. So I think those are some of the things that that stand out.
Well, you gave me a good lead in there, because really the only complaint that I've heard is that you guys can be a conservative company in your view of your business.
Yeah.
But yet you look at protected over the long term, and you've done extremely well through difficult economies. And you started touching on that with some of the business decisions you've made. So can you expand on that a little bit more?
Yeah. So yeah, and again, I love talking about this, Trent, because we get that. Protective is a conservative company. I get that. I think I guess the way we look at it, and sometimes the way that's the way it gets described. But what we're looking to do is we're looking to be very, very disciplined. We're looking to be very reliable, and we're looking to be very consistent. And then if folks call that conservative, so be it. But what we found is there end up being some really, really beneficial things for the way we manage our business. An example is, so when we build products, we're looking at, we want to build as much value into the products that we're developing as we can. And we're not trying to build products for marketing glitz, as an example. Like, let's build this thing and we can like promote it and sell it this way. If it doesn't have value, we're really not that interested in it. And the value in some respects kind of sells itself. We also, we're looking to build products that are going to perform the way the producer and the customer thought they were going to perform when the product was sold and when it was purchased. I mean, those are the kind of things that we focus on. And again, the people we worked with for a long time love that. They love that discipline. They love that reliability. They love that consistency, because when we take that approach, lots of good things happen. Again, the value of the products that I just described end up being a focus. The fact that those products, we're building them to do what everybody expected that they were going to do. So consequently, as an example, we're not in and out of markets. We don't have a product out there for a little while that goes gangbusters and then we pull it off the shelf. And we just don't do that kind of thing. We're not looking to, be high flying one day and then, dropping down to the bottom the next day. That's not our gig. A good example of this is us in the GUL marketplace. So, I mean, we've just been consistent, steadfast, reliable in the GUL marketplace. And keep in mind that, a few years ago, for a long, long time, we had this prolonged low interest rate environment. So consequently, a lot of companies had built their GUL products assuming that, interest rates are really, really low, but eventually they're going to come back. So let's build those products assuming that those interest rates are going to come back to the way they were before. And if that happens, that's okay. But if it doesn't, you got problems. And we've just never done that. We're like, look, here's what we know. We're going to take what we know and we're going to build our products based upon that. So consequently, when other companies were pulling out of the GUL marketplace, when they were doing pretty significant repricings, on and on and on, here we were just continuing to do our thing, continuing to be consistent, continuing to have a valuable product, continuing to be very, 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 very valuable, very, very competitive. So all we had to do was just keep doing what we were doing, and people were like, "Wow! I mean, we appreciate that. You were the company that hung in there. You were the company that kept your product competitive and consistent all along the way." And it was kind of interesting because we became even more and more competitive and more valuable every day. And all we had to do was just keep doing what we were doing and what we had committed we were going to do from the very beginning. So again, we get that you're a conservative company, but the people who have worked with us for a long time are like, we love that about you. There's one distribution partner we used to work with, and he's like, you guys are the most boring company that we work with. And we love that about you because we know we can count on you. So again, it ends up being, sometimes people look at that in a negative fashion, but again, the people who've worked with us for a long time say like, hey, that's why we love Protective.
Yeah. And I think that's a good distinction. You're not conservative in the way that you've done this and that's how it will always be.
Right.
Yeah. That's what you want in family and friends, them to grow, but stay the same person.
Yeah. Yeah, exactly. Yeah.
Now, Protective has been known to be a acquirer of insurance companies and books of business.
Yeah.
Liberty Mutual comes to mind. So how does this diversity strengthen the brand?
Yeah, it's a really good question. And I've always felt as though, so I'll go back. I mean, we've acquired 59 blocks of businesses or companies in the history of our company. And in many respects, that's one of our kind of unfair advantages because almost everybody we compete against is just growing 100% organically, one policy at a time. And obviously we do that as well, and we do it very successfully. But we've also had this acquisition business for a long, long time. And again, 59 acquisitions in the history of our company. So the opportunity that we have for diversification, the opportunity we have to grow in multiple ways, it's hard to duplicate that if you're only growing one way. So it's been a really, really good thing for us. And in those 59 acquisitions, there are a lot of things that we get every time we make an acquisition. First of all, I think it's interesting to note, just in the time that I've been with Protective, we just bought blocks of business, and that's been wildly successful for us. But then we started to make this change where we bought blocks of business. We also bought the active distribution channels and organizations that went along with that. You mentioned Liberty. That's a perfect example. So we did it with Liberty, and then we turned around and we did it again in Great West. So the things that happen for us, and part of why, again, you go back to this stability that we were talking about before, that comes from the organic one by one policy by one policy, but it also is complemented and augmented by this distribution strategy. Every time we buy a company or a block of business, those blocks are almost immediately accretive to earnings. And that's a big deal for us to continue to be successful and continue to be stable on an ongoing basis. At the same time, going back to these, we've made the switch from just buying blocks of business to buying blocks plus the active distribution. So again, think about some of the acquisitions that we made in the past. Great West, part of what we acquired there was their executive benefits business, the Coley-Boley business. That's a big deal. I mean, that's been a really, really successful part of our business ever since we acquired them. We actually bought in the Liberty business and in the Great West business, we bought the two leading single premium whole life companies in bank distribution. With those two acquisitions, we weren't even in that business. Next thing you know, we're the number one provider of single premium whole life in banks. We made another part of the Great West acquisitions. We bought part of what they had was they had this really big advisory variable annuity business with Schwab. So all of a sudden we were in the advisory variable annuity business. The Liberty acquisition, part of what we acquired there was a simplified issue offering, specifically for PNC distribution. So, we have a simplified issue product with Liberty. We have a simplified issue product in our Allstate relationship. So every time we buy one of those, again, we get the accretive earnings from the block, but then we're also adding all these different distribution channels. We're adding these different products. At the same time, every time we've done an acquisition, we get this new technology. Every company we've acquired has had some really cool technology, and I won't go through this laundry list, but every time we buy one of these companies, we get this technology that comes along with it that enables improved experience for our producers and our customers. And I would say this is the most important thing, going back to what I said before, that there is no such thing as the company. The people are the company. Every time we make an acquisition, we get these wonderful people become part of the protective organization. And we have some of the highest performing people in our organization today are from, one or the other is these acquisitions that we made over those 59 acquisitions. So that combination of instantaneous, accretive earnings nature, new channels, new products, new technology, and really, really talented people. Yeah, I mean, that really takes where we are today. And every time we do one of those, we get even better. So yeah, again, I think it's an unfair advantage for us versus some of the companies we compete against.
I don't know if I would say unfair, because I think something you said makes your point about company culture even more impressive. Through this exponential growth, you've maintained that company culture, and that's a lot of due diligence on your part, I assume.
It is. There's no doubt. I mean, and it's interesting you bring that up because so we can buy a block of business, and it's just a static block of business. We bring it over, we put it on our administrative platform, and and we all agree on how we're going to treat that business, and we're off to the races. However, if we're going to bring in active businesses, one of the things we're going to be sure of is, is it a great business? Is it profitable? Are there growth opportunities? Yeah, all that normal kind of stuff. But one of the boxes we're going to make sure we're going to check is there a cultural fit here?
Hmm.
When we're not going to, if it could be the greatest, on paper, it could be the greatest business opportunity, but if it's not a cultural fit, because we're not going to do anything that's going to damage the culture of our company. So we're always checking that box. Frankly, we do the same thing in big distribution partnerships. When we're looking at different distribution partnerships, that's one of the things we're looking at is like, okay, so yeah, great business opportunity. Are we really going to fit in the way we think about business and the way we treat one another and all those different kind of things? So yeah, it's something that's just woven into. It's not even really what we do; it's just who we are. So
Right.
that's a really good point.
So we're on the topic of acquisitions, and we got to address this. But I'm going to steal your word, so it's going to be a loaded question.
Okay.
You guys are celebrating 10 years of being bought by Dai-ichi of Japan. And you use that word celebrated specifically last time we talked. And so it's going to be loaded. I know that, but how has it affected your company?
Yeah, and again, it's fascinating to me because again, I've been in the financial services industry now for 35 years. So I know I have a lot of friends who are part of companies who are acquired by either another domestic carrier or in a lot of cases European carriers.
Mhm.
And I'm telling you, there's not one of those that was like, oh, and I'm so glad it happened. It worked out great for everybody. They're just not that way. So I joined the company in 2015. We were acquired by Dai-ichi in 2015. So in my head, I'm like, whoa, wait a second, hold on. I know how this thing goes. But what Dai-ichi said from the very beginning is like, look, and keep in mind the reason Dai-ichi has started this years ago is, Japan is just a no growth country. So if they were going to grow their businesses, they had to go around and make these global acquisitions. And they had done it a few times. And when they were talking with us, they said, look, here's what we do. We buy great businesses, really successful businesses that we like how they do business. And then we just let them continue to do what they've always been doing. And all we're going to do is we're going to support what you do and how you do business. Now, I'll tell you, that's about what everybody says. It's like, oh yeah, we're just going to support you and we're not going to change everything. But in a lot of cases, that's not what happens. But we say we celebrate our acquisition by Dai-ichi because we were in a great spot. We were a really, really successful company when Dai-ichi bought us. But it's become even better since that acquisition because they did exactly what they said they were going to do. We're going to buy you because we respect you. We think you do great business. We think we're a great company. We love the way you do business. And all we're going to do is support you and continue to invest in you so you can do more of those things that made you attractive to us at the very beginning. I think there's another element here that's interesting. Part of that is, and again, that cultural fit that we were talking about before, that was a big deal to them too. They wanted to make sure that they had a cultural fit, and so those things lined up. They lined up really well. And again, they did exactly what they were going to say they were going to do. I think the other part that's interesting is, and a little bit of this is Dai-ichi, but it's also Japanese business culture is a little bit different. They truly have a long-term perspective. So just keep in mind that, we were a public company traded on the New York Stock Exchange, and everybody talks about the long-term perspective, but the reality is most companies are very influenced by, we're taking a long-term perspective, but we have to show up next quarter and the quarter after that and the quarter after that, and we have to talk with people about how things are going, and they're expecting like these instantaneous results. So Dai-ichi tells us from the very beginning, here's how we do it. We take a long-term perspective. We have 20-year business plans. It's like, what? 20-year business plans? And we're just going to give you a break out of the gate. We'll just ask you to do a 10-year business plan to begin with. But just think about how that helps what we do, having that true long-term perspective, being able to continue to do, in many respects, do even more so the things that made us successful from the very beginning. So again, we say that celebrate word, and again, I can't talk with anybody of my friends who were acquired by another company who say it that way. But that's why it is that way. They did exactly what they said they were going to do, and then they reinforced this long-term perspective that we had long before they acquired us. So yeah, it's been a really good deal for us. And oh, by the way, really good for our distribution partners, really good for our producers, really good for our customers. It's just been a winner all the way around.
Yeah, well, I'm glad you touched on that because you've worked with publicly traded companies, and now, by what you said, you finished that 10-year business plan. I assume you're working or have finished your next 20-year business plan. So you've seen the differences in how products get built. What does that look like now that you can look 20 years down the line instead of 3 months down the line?
Yeah, it is. It's a good point of reinforcement. And again, I don't know that it's necessarily different. It's just the fact that working with Dai-ichi, they just reinforce that and they support that, and they're committed to that just like we are. So again, you get some people want to do things that are going to be really beneficial for next quarter. And we just don't do that. And we're just having this long-term perspective. And again, I think everybody wins with that approach.
Well, let's get into some industry.
One of the things I was thinking about that question you were asking before in this whole conversation about Dai-ichi and the cultural fit between our companies. So you were talking a little bit about our culture, but a little bit about Dai-ichi's culture. And another element here for us has always been just giving back to our communities. And again, that's been something that's been a part of Protective from the very beginning, but that's also been a big part of, and that's something that's really, really important to Dai-ichi at the same time. So that cultural alignment you're talking about related to who we are, who they are, and again, that reinforcement. I mean, we just, every year we're contributing or investing, however you look at, millions and millions of dollars in our respective communities. And Dai-ichi is 100% behind that and actually invests themselves in those communities at the same time. So anyway, I just wanted to reinforce that because I think it's a really important part of who we are and who Dai-ichi is at the same time.
Yeah, I agree. Now, industry-wide, we've seen a lot of change, either in distribution, retraction of carrier systems and career systems. What do you see in the road ahead? What changes are going to happen with distribution, and how are we going to get more people into the fold of life insurance?
Yeah. Yeah, good question. So there is no doubt. I mean, I mean, just think about, I mean, you don't even have to look that far back, but the things that have changed, a lot has changed in the last, and I'll just use the 10-year time period since I've been at Protective. A lot of things have changed during that time period. I'll start off though with one thing that hasn't changed, and in my opinion, one thing that's not going to change. So I can't tell you the number of insurtech organizations I've talked with over the last X number of years. And there's always like, look, we've taken this thing, we've made it easier, we made it faster and all that kind of stuff. And that's all great. And that's really, really beneficial. But the thing that hasn't changed is that life insurance is sold. It's not bought. Sometimes people try to like compare life insurance to like P&C and just do the same kind of things that happens in P&C, and that's going to apply to life insurance. That's just not the way it is. People can have all this cool information, but we've seen they still, when it's all said and done, they still want to sit down with somebody. It's like, tell me what I need. Tell me how much I need. Tell me what products I need. Tell me how to use those products. Tell me how to change those products as time goes on. So again, one thing, this is just, and I think this is true, we're always going to need advisors and producers. That's always going to be central to what we do here in the life insurance business. Now, back to the things that are changing, but also I think some of these things that are big growth opportunities for us. Number one is the gap between how much life insurance people need and what they actually have. That still is so big, and that's concerning. I mean, I'm personally concerned about that because I know there's so many people out there who are just not protected the way they need to be for them and their families. But oh, by the way, that reinforces this significant opportunity we all have in the life insurance business. So I think there's significant growth opportunity there. At the same time, I think, and I've seen it in some distributions where they're focusing on both from a producer advisor perspective, but also a customer perspective, younger people and more diverse people. And that has not been, that traditionally has not been part of, especially the life insurance industry for a long time. So I think there's another pretty significant growth opportunity there, just in, and again, from a customer perspective and an advisor producer perspective, younger, more diverse parts of our population. And I think the other thing from a growth standpoint, again, 35 years in this industry, and we still have not tapped into or really taken advantage of. We've made some progress, but we've not tapped into these alternative distribution channels. So think about the PNC business. Think about banks. Think about wirehouses. Think about broker dealers. Just the opportunity for those folks to add life insurance to their repertoire. And again, we're making progress, but we still have not tapped into the real potential that exists in some of those alternative distribution channels.
Yeah. So we haven't made a lot of progress, like you're saying, into those alternative distribution channels. You've touched on a few things you'd like to see, but let's take that Dai-ichi approach. Let's look 10 years down the line. What would you like to see in our industry?
So probably two different things. Number one, again, going back to that gap dilemma that we have, the gap between what people own in life insurance and what they need. And what I think we have an opportunity here as an industry, it's not something that just the carriers can do or just distribution partners can do or industry organizations. But I think there's a significant opportunity there for us to create more education and awareness about the need for life insurance. And again, that's something that we have to have, and it's hard to do, but I think a really coordinated effort by all of us is a pretty significant opportunity. So I think there's something there. And again, going back to what I just described before, I think involving younger, more diverse parts of our country are pretty significant opportunities for us as well.
Yeah. Now, we've seen life insurance products be pretty static and then introduced with variables and indexes and new riders. But it seems like the focus now is quicker underwriting and maybe a little bit more growth in riders like long-term care. And I know we talked about fertility with some other carriers. Do you think those are going to move the needle in accessing this divide, or is it really just the distribution partnerships there?
Yeah, so it is interesting because I think folks have felt as though if we make life insurance faster and we make it easier but again, if you look at the numbers, we're not selling that much more life insurance. Just think about over time. Think about how much cheaper products have gotten. Think about how much the value in those products has increased. Think about how much faster and how much easier it is. And again, we still have a whole bunch of people out there. So I think there's more to it than that. We should absolutely continue to do that. But again, when it's all said and done, we need people out there. We need advisors and we need producers and we need people who are supporting them like all of you to help to bridge that gap. Because when it's all said and done, that ends up being where it happened. And again, don't get me wrong, we should continue to make this cheaper and faster and more valuable. But again, when it's all said and done, somebody has to sell it and somebody has to provide that advice along the way.
Yeah. Well, speaking of the riders, there's, as you know, pressure growing in many states concerning long-term care. We're all still guessing at what that outcome's going to be. But can you share Protective's view and solutions on this?
Yeah, so this is going to be the shortest response of the whole day, because that's just not, we've looked hard. And think about, these 59 acquisitions that we've made over time. For every acquisition we make, we might look at 15 to 20 different companies. So there's no doubt about it. If it's out there, we've looked at it and we thought about that because we see that gap that exists and that need that exists for long-term care. But we've just come to the conclusion that's not a business that we're interested in. So the need is there, and I know there are going to be companies who are going to participate in it. But boy, there's a lot of stuff that everybody needs to get their arms around so that business can be sustainable for a long time period.
Yeah. Well, thank you, Matt. This was a great conversation. I just want to open up to you if you have any closing thoughts on any of this, anything you'd like to add or circle back on.
Yeah, so I guess I would just say three things. Number one, I'm going to say this, and I think it's probably obvious. I'm just reinforcing, but I couldn't be more optimistic about our industry. Again, I've been doing this for 35 years, but if I was going to start over and say, okay, look, I'm going to start in any industry that I want, this is the one that I would actually just start. I wouldn't take that detour I took at the very beginning. I just get right into the business that we're in today. So I just couldn't be more optimistic about the future of our business. I also think, and I do this almost every time I'm in front of people, I think just a reminder of the impact of what we do every day. And it doesn't make any difference what part we play in that chain, from the creation of a product to the selling and the buying of a product and every stop in between. We know that when it's all said and done, somebody is going to benefit greatly when they buy a life insurance policy or an annuity policy or a retirement plan or whatever the case may be. And I just don't think we can ever be reminded enough that what we do is having that kind of impact. Is part of the reason why I feel blessed every day to be a part of this industry. And the last thing I would just say is I thank you Trent, I think Barry, I think all the folks there at BGA Insurance. Thank you for this opportunity to be talking with you today. Thank you for the partnership that we have shared for so many years. You guys have been tremendous business partners. And part of the optimism I have about the future is rooted in the fact that we have these tremendous distribution partner relationships like we have with you. So very, very grateful for our partnership, very grateful about this opportunity for us to be today, but very optimistic. A lot of it has to do with the fact that just the things we're going to be able to do together on an ongoing basis, I'm really excited about. So thank you very much. We really appreciate it.
Well, I think I can speak for everyone here at BGA that we're very appreciative of you and people like you in our industry that push it forward in a positive direction. So thanks right back to you. And for everyone watching and following along with this, these are the people we like having on. These are the people we like talking to. We're positive and pushing the industry forward. So it feels a little cliche after a heartfelt ending like that, but follow, like, and subscribe, because the more you participate, the more we can get on guys like Matt, who are just really dedicated to that end goal of making an impact. So thank you all for joining, and we'll see you next Tuesday. Thanks, Matt.
Thanks, everybody.